village, but their parents are well aware how your parents are doing best for you, even sacrificing lot of things for themselves. So saving is the first step, but my dear friend, unfortunately, my generation did a blunder. That is why, what is that? We kept the saving at home. That was a blunder on part, Mr. Bhavan. You will appreciate. We were saver, but we kept the saving at home. For the purpose of saving, I personally feel was self-defeated. So now the time has come when we should not keep our saving at home. Rather, we should put this saving into one or other investment product. And that the process of putting your money into one or other product is called investment. And the purpose of investment is very simple and distinct. My money which I have saved, the money which I have been putting in one or other product to start earning. Money for me. It will be second channel of income for me. So my dear friends, investment is the second channel of income for you. And sometimes it is more important, or it is more beneficial, or it is more rewarding than even whatever you are doing. And if you are a job, salary, you are a business, you get profit. If you are in a profession, you get professional fees. So whatever you are doing, you get salary. Hello. So what I want to tell you is that investment is very, very important, not only from the perspective of making money, but also for giving better and comfortable life to your family and to yourself, and to have your wish achieved or thought of what you have in mind. That is why investment is very, very important. And now the time has come, we have to be investor. Now coming to the present session, because there are plenty of investment options available, but since you have given me the topic to speak only on mutual funds, so I will confine myself to the mutual fund. Now, first of all, mutual fund is only one of the products available in the market. That you should be well aware. Mutual fund is only one of the many products available in the market. And secondly, mutual fund is not an investment as such. Most people still feel that I'm making investment in mutual funds. Mutual fund is not an investment as such, my dear friends. It is a channel for investment, Mr. Mahan. It will give you opportunity to invest in different asset class, financial and non-financial as well. The security mutual funds have. So mutual fund is not an asset investment product. It is a channel for investment. Secondly, it is an indirect way of investing. You are not investing. You are giving your money to some experts. Naturally, Mr. Wan and the participant may ask me why we should give our money to other people or third party. There may be three reasons for which you might consider giving your money to others. Number one, and that is most important one, I don't have knowledge of the market, or I don't have knowledge of the product, investment products available in the market, but they people whom I am giving my money are relatively better placed to make investment decisions for maximizing return on investment. So they are experts, but again, my dear friend, they are not God. They are experts only. They may also make mistakes because in investment, particularly in security market, nobody can be God. Nobody can precisely predict where the market would be after 1 week, after 1 month, after 1 year, after 10 years. Nobody can. All make presumption. Everybody makes presumption. You might be seeing a lot of so-called TV experts coming on business channel day in day out. They will be forecasting about individual share, about the sector, about the economy, a lot of things they keep telling to the people. But I personally feel nobody can predict precisely where the market will be and what will be the return on your investment, particularly in mutual funds. So this is so what I was telling you here, mutual fund is indirect way of investing. You are not investing your money directly. You are giving your money to some expert, but the purpose of giving your money is very simple and distinct. I want maximum return on my investment. That's the only purpose. It's not a social cause you are giving your money to him or her. You are giving your money to the expert, they are technically called fund manager, with the expected of getting maximum return on your investment. Secondly, you don't have time. And my dear friend, investment is a serious business. It's a very serious thing. If you are casual in investment, you may not get the return which you might otherwise entitled to or have right to. So you have to be in the investment all the time. You have to be very serious while making all your investment decision. Not only while making all investment decision, but also after making decision, you have to keep an eye very closely how your investments are performing. So investment is a serious business and that requires your time. And perchance you don't have time. Why? Because you are in job, you are in business, you are in a profession, you are involved in whatever you are doing. And secondly, you don't have experience. You don't have experience of investment. People to whom you are giving your money are experts in investment management. But again, I tell you, they are experts. They have got experience. So their decisions are likely to be better. Again, underline likely to be better than what you could have made as an individual. That is why you may think of giving your money to the to the mutual funds. And in mutual funds, there are plenty of schemes, around 1,500, 1,300 schemes are there. All different schemes. All different schemes have different object and purpose and tone and tenor. When these 1,500 schemes are being run by 45 plus mutual funds, which are technically called asset management companies in the country. So there are 45, 46 asset management companies. Every day one inclusion is there because of the growing market. And they are running more than 1,300, 1,400 schemes. And every scheme is distinct and has been started for the distinct purpose. And their philosophy of every scheme is also different. And here I want to add here that mutual fund is strongly regulated by SEBI. It is not a Ponzi scheme. It is not a cheat fund. Mutual fund industry is strongly regulated by SEBI, which is the regulator of security market in India. Every aspect of the scheme, every aspect of the AMC is closely watched and monitored by SEBI as a regulator of security market. So mind it is strongly regulated. It is a regulated product. It is not a regulated product. And there are plenty of unregulated products in the market. Ponzi scheme, cheat fund, and committee. You might have heard a lot of names, Sahara, PACL, in South also a lot of people, and even last week I was reading in newspaper article that one fellow you put more than 17 crores of 1,700 crores of rupees of the people of Telangana and Andhra Pradesh. These things, this news keep coming in. Why? Why people invest in Ponzi scheme, cheat fund and committee? Have you ever thought of it? only because of greed. Because they promise you higher return than the normal return. They will promise you doubling your money in 4 years. They will promise you doubling your money and giving you 20-25% return. They can't. They can't. That is why I always keep emphasizing, particularly young people like you, never invest, deposit or give a single penny to the Ponzi scheme, chit fund and committee. Always investment in the products which are investment products which are regulated by financial regulators. There are 4 financial regulators you must be aware. That is RBI, looking after bank deposits and NBFC, SEBI, taking care of security market, PFRDA, taking care of pension schemes like NPS, and then IRDA, Insurance Regulatory Development Authority, taking care of all insurance-related products in the country. So please invest only in the products, investment products, which are regulated by the financial regulators, not beyond that, including cryptocurrency. Cryptocurrency is not yet legalized. That's why I am very emphatic in my session. Never invest a single penny in cryptocurrency until and unless government, or for that matter RBI, gives it some legal sanctity. Cryptocurrency has no legal sanctity, so never invest a single penny. So again, coming to the mutual fund. Mutual fund is indirect way of investing, where you are not directly investing your money. You are giving your money to the experts, which are technically called fund manager, to invest your money. When you are giving your money to them, you are putting your money into one or other schemes which are being run by the mutual funds. So there are distinct schemes which having distinct purpose and objects. Some schemes are there, their own purpose is to generate maximum return for you. But in those scenarios, risk will be there. There are schemes in the mutual fund which have got relatively lesser risk. They will give you reasonable return, but while taking care of your risk as well. And in mutual fund, there are schemes which had literally got very little risk, because in those schemes, your old money will be invested into government securities or government securities. So mutual fund is nothing but pooling of resources by individuals. People like you and me, lakhs of people pool their money into one scheme. That fund manager has got crores of rupees. Then he take a call to invest your money as per the guidelines and criteria of the scheme. And one more thing I want to mention here. Mutual fund schemes are prone to security market volatility mostly. So mind it. Nobody in the mutual fund can give you guaranteed return. My dear friends, if anybody is giving you guarantee about the particular level of return, he's minded, he's not fair person. Avoid her. In mutual fund and for that matter security market, nobody can give you guarantee. So because majority of the mutual fund scheme relates to security market only, majority. But you may not be aware that in mutual fund there are schemes beyond security market as well. In mutual fund, my dear friend, schemes are there where your money will be invested into real estate and property. In mutual fund, there are schemes where your money will be invested into gold or commodity. And in mutual fund, schemes are there, my dear friend, where your money will be invested into international corporates like Amazon, Google, Facebook. So you can get opportunity to invest in Google, rightly sitting at your home or in your city, to be part of the investment journey in Google or some other people. That facility is also available, and that is available through international funds. So in mutual fund, schemes are available as per your risk appetite. You have to identify the scheme as per your risk appetite. In mutual fund schemes are there. There are schemes which have got highest risk, like equity fund, where your money will be invested into the equity share. But in the mutual fund, there are schemes which has relatively got lesser risk, that is hybrid funds, where some of your money will be invested into equity share and some of money will be given as a loan to the corporates or entities. Then there are schemes in the mutual fund where they will exclusively invest your money only in that instrument of the corporates. Only that instrument. Only they will give loan to the corporates. So there are distinct features of each scheme. So you can choose a mutual fund scheme as per your risk appetite. Likewise, my dear friends, in mutual fund schemes are available as per your time horizon of investment. Time horizon investment. Mayan, you might not be aware. In mutual fund, there is a scheme which is called overnight funds, where you can invest only for one night. You invest tomorrow evening and you withdraw tomorrow morning, only for one night, and you will get some return. Of course, very marginal, but you will get some return. So, and then in mutual fund schemes are there where you can invest for a week, for a month, or max for 3 months. That's the liquid fund. Very short period of tenure. And there are schemes in the mutual fund where you can invest for 3 months, 6 months, ultra short-term debt funds. Then there are other schemes in the mutual fund where you can invest money for 6 months to 1 year to 3 years, and then for 3 years to 5 years to 10 years to 50 years. So in mutual fund, the schemes are available as per your risk appetite, and the schemes are available as per your time horizon of investments. So both these things are available to you, and that is the distinct feature of mutual fund. And what are the normally advantage of the mutual fund? But before coming to the advantage, Mr. Mayan, I will come to the disadvantage. And what is disadvantage? Mutual fund, in most of the mutual fund schemes are related to market risk. Means if the market goes up, you might get good return. If the market is stable, you might get reasonable return. If the market goes down, you may even suffer temporary losses. So this is the disadvantage. But what is the advantage of the mutual fund? Number one, it is professionally managed. Mutual fund schemes are professionally managed by experts. Those who are managing investment in mutual fund are the experts of the security market or the particular domain in which they have started a scheme. Second one is risk diversification. Suppose Mr. Mayan decides to invest in security market and he takes one share of the company. That is his limitation. Maybe one company, maybe two companies. In mutual fund, if he invests his money in one of the equity funds, and like him, lots of other people are also in the scheme. The fund manager will have corpus of for free. That he can invest in a number of companies, maybe 5, maybe 50, maybe 100, maybe more than that. So automatically you if you invest in one or two companies, your risk is related to the performance of that one or two companies. But if your money is invested into 100 companies or more than 100 companies, risk will automatically diversify because it will always happen that some companies will perform very well, some companies will perform okay, some companies may perform even below par. So, if you are investing in the mutual fund scheme is investing in 100 companies, there is a possibility that few of them might do very well, and some of them might do reasonably, and few of them might not do reasonably even, or rather no such. So it will be average out. So in mutual fund, risk diversification of is there. Then affordability and convenience. This is the third distinct feature of mutual fund. You can start investing with a very small amount. Not a big amount is required. You can start investing with even 500 rupees. This is such a small amount where you can start investment in mutual fund. But if you go for the 500 rupees bank deposit, I think bank people may not agree to you. Of course, there is no bar as well, but they will say, sir, give us a good deposit. And likewise, if you go for the real estate or gold or for other products, you will definitely need very good amount to invest. But in mutual fund, you can start investment in a very, very short period. Then what's liquidity? And the basic benefit of mutual fund schemes are they are liquid. At any time you can withdraw. To be prudent, you should not withdraw frequently. It's a different thing. But that facility is always available to you that you can withdraw your money or the return at any point of time. And one more, the liquidity is there. Mr. Mayan, you might remember that in bank FD, suppose you go for a bank FD of 5 lakh rupees, Mr. Mayan, for 1 year. After 6 months, suppose you need 2 lakh rupees. You go to the bank and ask them, sir, I want 2 lakh rupees, some emergency is there, and I have already got 10 lakhs bank activity. Which what bank manager will tell you, Mr. Mayan? Yes, Mr. Mayan, you have bank FD with us for 10 lakh rupees, but we can't give you 2 lakh rupees out of that bank FD. There are two options available to you. Either you withdraw, either you close the whole FD of 10 lakh rupees, get 2 lakh rupees, and get a fresh FD of 8 lakh rupees. Of course, some concession and some loss might you have to suffer on that. Or alternatively, you can raise loan of 2 lakh rupees. Yes, 10 lakh rupees FD, but then you will have to pay interest. But in mutual fund, my dear friends, suppose you have got a corpus of 10 lakh rupees accumulated over a period of time, you can withdraw even 1,000 rupees. No question asked. So in mutual fund, liquidity is there. Then it is very low cost product, very low cost. Because SEBI has kept a cap on the fees to be charged by the mutual fund companies. In equity fund, the fees is relatively higher because it has to be a dynamic fund. You have to do it all the time. So that fund, the charges, the fees is very, very low. And again, because of competition, my dear friend, among the mutual fund companies, the charges or fees have relatively come down. So that is also available in the mutual fund. And then, as I just mentioned, the fund is strongly regulated by SEBI. It is not a Ponzi scheme, it is not a chit fund. It is strongly regulated by SEBI. And it is also tax efficient. In bank FD, you might not be aware, Mr. Man, whatever interest you earn on bank FD will be treated as your income, and you will have to pay income tax as per your income tax slab. Suppose if you come in 30% bracket, you will have to pay 30% on the interest earned by you on bank FD. But in mutual fund, there are two categories, that is long-term capital gain and short-term capital gain. If you withdraw your money within 1 year, then whatever profit or whatever return you have got, on that you will have to pay 20% capital gain. But if you withdraw your money after 1 year, normally called long term, 1 year, 3 year difference, some differentiation between debt and equity is also there. Your tax liability will be only 12.5% of the tax capital gain. So what I want to tell you, that mutual fund is also tax efficient. But of course, in mutual fund, risk is there, my dear friends. But risk can be averaged out over a period of time. So what is always advised to the middle class, salary class person, please never be a short-term investor. Just like trader, just like jobber, or just don't go into F&O segment at all. SEBI has been warning time and again, day in, day out, to all the retail investors, F&O segment is not for you. And SEBI has recently come out with data also, my dear friend, that 96% of the retail investors have lost money in the F&O segment of the security market. Please avoid it. Then what to do? be a long-term investor. Think of your long-term planning. Think of your goal or think the requirement of your money future in your life, and accordingly you start planning and investing through mutual fund. As I just mentioned, the funds are market risk. It will again risk will be averaged out automatically over a period of time, because sometime market will go up, sometime market will go down. So your risk will automatically be averaged out. And as I just mentioned, mutual fund is one of the most transparent products in the country among the investment products. Because suppose again I come to the FD, suppose Mr. Mayor has gone for a bank FD of 1 lakh rupees with a bank for 1 year. After 6 months, he visits the bank and just asks the manager, "Sir, I just want to know where my 1 lakh rupees has been invested by the bank, or where my 1 lakh rupees has been given, to whom it has been given." The bank manager will laugh at you. What he will say, "Sorry, sir, this information I can't give you. Because even I don't know where 1 lakh rupees of yours has been invested." But in the case of mutual fund, my dear, every fortnight and every month, you get a detailed statement of the scheme where your money has been invested penny by penny. Every investor, you might have invested 1,000 rupees, the third person might have invested 10 crore rupees. Far in getting information on mutual fund. So it is a most transparent product. Every month you are shared with all the details of your portfolio of that particular scheme, where your money has been invested, in which company, what number of shares which are purchased, at what price, and what the price of this company. Everything, every information is shared with you on a regular basis, which no other product will give it. Mutual fund has got established track record for last 10, 15 years or 20 years.
तुमचे स्क्रीनशॉट दाखवा actually 51 it's yet 51 so on WhatsApp on actually approximately 51 why it is usually a screenshot I can see a 151 there
of the thing, and now you can invest your money in mutual fund scheme online only. You need not go to any.
Actually 151 yeah देखो चलो ठीक बदल ले तो वो प्रोग्राम से महलो तो है क्या अच्छा ठीक क्योंकि वो पूरी में ही ना ये अच्छा जैसे 1 फिगर में सेंड आप करते हैं मतलब एक फोटोग्राफ जब ना इमेज करूं 151 161 है 151 चलो ठीक
online at time, hardly it will take 1 to 2 days to get the money from the or in the case of mutual fund adoption. Mutual fund has got two options of getting return. One is direct plan, other one is regular plan. In direct plan, you are directly going to the websites of the channels of the mutual fund and investing your money. No third person is involved. You and the mutual fund AMC or the company. It is called direct plan. If you are not able to do because of some lesser knowledge of net or of IT and all these things, you are not so comfortable investing online, then other option is also made available to you. That is through regular plan. In regular plan, my dear friend, you will need to take services or help of the local mutual fund distributors. And there are 3 lakh plus mutual fund distributors across country. In Vijayawada also, there must be a good number of mutual fund distributors available. You can get the list of those mutual funds on the website of Amfi. All details, contact details are there. You can go to them and take them. They will come to you. They will come with a form or application form. They will get the form filled. They will help you out in the form. They take document from you. They will go and deposit your documents with the mutual fund company concerned, and then your mutual fund will be started. So again, there are two options: direct plan, regular plan. In direct plan, no third party is there. You're directly investing for the website or for the channel of the mutual fund. In regular plan, you are taking help of the authorized person that are those who are called mutual fund distributors. But mind it, in direct plan, your return will always be higher. Why? Because no third party is there. But in the regular plan, since mutual fund distributor is in between you and the AMC, he or she will definitely get some commission. He is not doing any social service. He is getting some commission, and that commission will go out of the return. So, in the same scheme, if you invest in, if the same is if you invest in, in mutual fund, every SEBI is promoting that you should go to the direct plan. Again, if you are going with a direct plan, please do have knowledge of the mutual fund schemes. Because in regular plan, mutual fund distributor is there to advise in direct plan, return will always be higher in the same scheme. And the return in the regular, if you opt for the regular plan, return will be relatively lesser in the same. So in the same scheme, two set of returns are there. One for the direct plan holder, and other is for regular plan holders. If you are investing directly, your return will be relatively higher. If you are investing through a regular plan, your return will be relatively lesser because some portion of return will be species to the distributor. So it is also there. And in mutual fund, there are some distinct abbreviations you must know. The first one is the most common abbreviation which everybody might have heard, that is SIP, SIP, Systematic Investment Plan. My dear friend, SIP is nothing but you are regularly investing in a particular scheme. It is just like a recurring account. You might have, if you are already earning, or if you talk to your parents, they will say you that most of the middle class, selling class person have one or other time done recurring account, have opened recurring account with the bank or post office. And recurring account is nothing but regularly depositing a fixed amount in that account. SIP is just like a recurring account. You are investing a particular amount every month. Mostly, SIP can even be on daily basis, can be on weekly basis, can be on monthly basis, or half yearly basis, or quarterly basis. But since in India, people get salary, those who are particularly class person, those who get salary on monthly basis, most of the SIP are run on monthly basis. That is called monthly SIP. So every month you are depositing or you are investing some amount. And again, for investment in mutual fund through SIP, you need not go to the bank or the mutual fund company. Everything is available on online itself. So you can start your SIP online itself in any of the schemes which you have selected for your investment. So SIP is nothing but regularly investing. The minimum amount of SIP for earners, those who are already earning money, is 500 rupees. Maximum, there is no limit. You can start SIP or even 5 crore rupees if you afford to. But minimum amount of SIP for the students who are yet not started earning but are keen to invest in mutual fund is only 100 rupees. So for students, I will encourage them to start a good SIP, an SIP in a good equity fund, or Nifty fund, which are focused on the Nifty movement only, to start with. So SIP is nothing but starting regularly, investing regularly. And my dear friend, you might be reading in newspaper, crores and crores of young people, particularly, especially, have started investing through SIP in mutual fund. Even today also there is newspaper news is there. Amfi releases monthly data by 10th of every month. 25,000 crore plus are coming into mutual fund through SIP route only. Means people like you and mostly service class people have started SIP investment. So SIP is nothing but you are investing regularly. I just give you one example to make sense, to make a fair idea how mutual fund SIP can do wonders in your life. Suppose a person at the age of 20 started an SIP of 500 rupees, only 500 rupees. Every month he is investing 500 rupees in some particular equity scheme. Investment will be automatic. You have to give a mandate to the bank that this much of amount can be deducted from my salary through the AMC. Then a request will come to the bank from the mutual fund company for getting money of your SIP every month. Date also you can decide, right? From 1st to 31st, anything, any date you can decide. So date also you can decide. Date also you can decide. So every month you are investing only 500 rupees. And money is going from your bank and being invested automatically and by and date of your investment. Once your investment is made, by evening you get a message from the mutual fund company that this month this SIP amount we have received and we have been that has been invested and you have been allotted particular units of that scheme because units are allotted. And you started SIP at the age of 20, just for example, say, and you continued with the SIP for 40 years, every month 500 rupees is going out of your bank account and being invested. For 40, big long period of course, but very beneficial. So just for example, suppose you started investment of 500 rupees of an SIP in a good equity fund, and every month you are investing 500 rupees only. After 40 years, when you become 60, and presuming a return of only 12%, whereas mutual fund equities have given more than 15% return over a period of time. Average out. Not every time, average out. 12, I am presuming only 12% return. You are investing only 500 rupees, my dear Mr. Mayan. After 40 years, you will have a corpus of 48 lakhs. 48 lakhs corpus you will have. But this is not the end, my dear friend. This is just the beginning. The one more beneficial and prudent way is available. That is called top-up SIP or step-up SIP. What is that? It is simply you are increasing amount of SIP every year. Why? Because Mr. Mayan, you will get increment in wherever you are employed. You will get increase in your salary. Your package will increase. So with the increase in your income, you can increase the amount of SIP as well annually. And ideally, if you can, you could increase your SIP by 10% every year. Suppose you started with 500 rupees in the first year. Second year, it should be 550 rupees. And that again can be automatically done. No need to go to anywhere else. You simply have to tick a column that I want to increase my SIP by 10%. So next year, automatically 550 will be deducted from your bank account. Third year, again 10% inclusion of 550. Every year you are including, you are increasing your SIP by 10%, incremental increase. If you do, and I think you must do that, that is called step-up SIP and top-up SIP, my dear Mr. Mayan. In flat SIP, you had got 48 lakhs, the corpus over a period of 40 years. But if you go for the step-up SIP or top-up SIP, you are increasing your SIP amount every year by 10%. After 40 years, flat SIP had given you a corpus of 48 lakh, my dear friend. But in step-up SIP or top-up SIP, your corpus would be 1 crore 92 lakhs. 1 crore 92 lakhs as compared to 48 lakhs. Why? Because you are increasing your SIP amount every year. So top-up SIP and step-up SIP is the best way of creating this corpus over a period of time. Mr. Mayan, I know a lot of my friends like you, particularly young professionals, young academicians, who have started not one SIP but more than one SIP. And each SIP is target-oriented SIP. Target-oriented, no casual approach. One SIP you have started for purchase of house. Second SIP you have started for purchase of vehicle. And third SIP you have started for going on vacation, foreign vacation, Switzerland, USA. With that target you have started third SIP. Fourth SIP for your higher education of your children after 25 years. You already planned in your head. Your education of your kids after 25 years. Fifth SIP can be of marriage of the children. So last SIP for that is for your retirement life. Leading a comfortable retirement life, you will need huge amount. So as a prudent person, what you have done now, you started a dedicated SIP only for your retirement life to develop the retirement purpose. You can start multiple SIPs at one time. With targeting focus. With targeting. And I know a lot of my friends who have started 5-6 SIPs, which are again I'm telling you with target, with an object, with assigned to a particular SIP. So SIP is a magic for middle class, salary class person particularly. Start SIP as early as you can. Continue with the SIP as long as you can. Start SIP. Start more than one SIP if you can. Continue upgrading the amount of SIP so as step-up SIP, top-up SIP if you can. The magic will automatically happen in your life. But Mr. Mayan, it will take minimum 15 to 20 years. Don't think of getting return in 1 year, 2 years, or 3 years. That fallacy is not available in the mutual fund at least. That UIP always keep emphasizing to people like you, be a long-term investor. So SIP is a magic for middle class, salary class person, and every person should know. And it is a very happy to know that now crore middle class people, Mr. Mayan, started 25,000 crore every year. 25,000 crore every month is coming into mutual fund through SIP. So SIP is going to be very big for the middle class, salary class person. The second term is STP. One is SIP, second one is STP, systematic transfer plan. STP is nothing, my dear friend, but just once you decide the scheme where you want to invest. As a prudent decision, you must not invest your lump sum amount in a scheme in one go. Suppose, Mr. Mayan, you have got 5 lakh rupees with you, and you want to invest 5 lakh rupees in a particular scheme. One option can be you put 5 lakh rupees in one go and then you are okay. But there is a risk, my dear friend. Suppose today you invest 5 lakh rupees in equity fund, suppose, and tomorrow market crashes, market goes down. Next day your 5 lakh can be even 450 lakh, 4.50 lakh in a single day. But there is other way around. How you can avoid this? You can first put your money into some liquid fund, then keep transferring this 5 lakh rupees, out of 5 lakh rupees, some 25,000 rupees or 50,000 rupees in a week or a fortnight in a month to the scheme where you intended to invest. So in STP, first you keep the amount of 5 lakh in a particular liquidity scheme of the same AMC, with the instruction that a particular amount, maybe 10,000, maybe 20, maybe 25,000, we transfer automatically, periodically from liquid fund to the designated. What benefit it will have? Your 5 lakh will be transferred from liquid fund to the liquid scheme over a period of say 6 months or 9 months. In this 6 months or 9 months, market will go up and down many times. So your risk will automatically be averaged out. So to manage the risk in lump sum investments has to be the best option. Third term is SWP, systematic withdrawal plan. My dear friend, STP is nothing. You are withdrawing some money from your corporate develop for a period of time. And that is most beneficial, Mr. Mayan, for your retirement life. But you will have to develop a huge retirement corpus. Suppose you being a prudent person started investing right from today for your retirement corpus, and after 30 years, you have developed a corpus of 5 crore rupees. And you can, my dear friend, I can tell you with my experience, anybody can develop a huge retirement corpus over a period of time, provided you work on it sincerely right from today. Every month you are investing some particular amount to retire. So suppose you have a corpus of 5 crore rupees, you have retired, you don't have pension, actually there is a need to lead a comfortable life, you have retirement, from the where money will come, my dear friends. In the scenario when you don't have pension, and you will need very good amount, my dear friend, Mr. Mayor, mind it. After 25 years, if you retire, 30 years you retire, you will need not less than 2 lakh rupees per month only for leading a comfortable retirement life. From where you will get that if you don't have pension? The only way out is developing a huge retirement corpus. Suppose you have developed a retirement corpus of 5 crore rupees. Now you have retired. You need 2 lakh rupees per month for your retirement life. Simply write a one line, one sentence mail to the mutual fund company where you have got a corpus. Please keep transferring 2 lakh rupees per month from my corpus to my bank account every month on first. They will do it, which ultimately your money. So they will every first they will keep transferring 1 lakh rupees from your corpus to your bank account. What benefit you will have, Mr. Mayor? You will lead comfortable retirement life because you are getting 2 lakh rupees on the first quarter. Second benefit is you have withdrawn only 2 lakh rupees. Remaining 4 crore 98 lakhs rupees are invested. They continue to generate return for you. So by the year end, when you have withdrawn literally 24 lakhs, that amount would have generated more than 24 lakhs. More than, or sometimes you at least that month, the same amount will be there even after 1 year because they are continuing to generate return. So SWP is the best proposition for leading a comfortable retirement life. But for that, again, I tell you, you will have to develop a huge retirement corpus. So, a lot of people are thinking of developing retirement corpus now, and they will enjoy their retirement life as well. There are two options of getting return on mutual fund schemes. Suppose you have invested 1 lakh rupees and the mutual fund gives you a return of 8% on in 1 year period. There are two options for you. One option is you get 8% with 8,000, use it and consume dividend into it. But I think that should not be done. What's the other option, Mr. Mayan has? The withdrawal part is called dividend option. Whatever you are earning, you are withdrawing it and enjoying it. Other option is growth option. Growth option means you are not withdrawing 8,000 which return you have got in 1 year. Automatically it will be reinvested. Automatically. You will not get anything, but your 8% return, in the case 8% return, that will be automatically reinvested. So next year, your principal will become 1 lakh 8,000. Again, suppose you want 8 lakh rupees, 8% return. So 8% return will come not on 1 lakh rupees, but 1,08,000 rupees. So it will automatically get increased. So growth option is the best option for making huge corpus for your family needs in future. So always go for the growth option, don't go for the dividend option. That is also there. Mutual fund schemes are available for investment in security market, in equity market, in debt market, in gold, in commodity, uh, even in international fund. You can invest in the market. Then there are dynamic funds and there are extended passive funds. Passive fund simply means they invest your money in particular equity and then keep that equity, whatever return are there, that is distributed to you for a period of that scheme. In dynamic schemes, fund manager has got leverage to sell and purchase equity share as per trend or as per their projections or as per the support and recommendation of his or her research team. So in passive fund, investments are once made are kept. In dynamic fund, purchase and sale of shares is a regular flow every day. Every day, the sale and purchase share. In dynamic fund, fees is relatively higher. In passive fund, fees are relatively lesser. So these are the basics of mutual fund I want to tell you. But before concluding my session, I will share 3 mutual fund sites for you. Please note it down. Mr. Sabjar, please note down that site also. And that is the first site, website, which has been developed by Amfi itself. Is the name of the website is Mutual Fund Sahi Hai. Mutual Fund Sahi Hai. This is the name of the website. Please visit that website. Information about the mutual fund which we have discussed today. We have just discussed. Every information is available on this website. What is mutual fund? How it works? What are the different type of mutual fund companies? What are the different type of mutual fund schemes? What is the performance of existing schemes of mutual funds? What is SIP? What is STP? How you can start investment? How you can get redemption in mutual fund? Everything about the mutual fund is available on the website. And this information is authentic, no hearsay, no promotion, no marketing of any particular scheme. This website is particularly developed for sharing knowledge about the mutual fund with the investors. So please do visit it. And the information is available in major languages of the country: Hindi, English, Telugu, Tamil, Oriya, Bengali, Gujarati, Marathi. Most of the languages, this information is available. So kindly do visit this website, not once, but regularly for the next 1 or 2 months. Just spend half an hour, 20 minutes, 30 minutes every day. Get the knowledge what the mutual fund is. You are all educated person. You please get knowledge. And once you are sure about the particular scheme, only then you think of starting investment in mutual fund, maybe through SIP, maybe through STP. The name of the website is Mutual Fund Center. This is again the website developed by all the mutual fund companies to give you a fair idea of the mutual fund activities. The third website is Mutual Fund Utility, MF Utilities. MF Utilities. This is also very good website and will give you a fair idea about the mutual fund and how it works and how you can start investment, what are the benefits, what are the risks, everything is given in this page. And one more thing, SEBI had developed an app that is called Sarthi, SAARTHI, Sarthi. Please download that app from SEBI website. Very good app, which will give you fair knowledge about the security market, including mutual funds. So please do visit these websites. Please download this app. Invest your time, my dear friends. Ultimately, it is your money, Mr. Mayan. If you get benefited, you have to make efforts for it. Don't go by the so-called advisor. And one more thing I want to tell you. These so-called financial influencer on the social media are fraud-minded. I am using very hard word for them. These are so-called finance. They will keep advising you. This share will go up, that share will go down. Purchase this share, purchase that sector. This is all fraud. For your knowledge, I can share with you. Recently, SEBI has penalized 7 so-called financial influencers. Out of them, one has been penalized 17 crore, 17 crore penalty because he was doing wrong things. He was advising you differently and he was doing contra. His action was different than what he was advising, or rather contra to what he is advising. So please be aware of such fraud. Always be alert. Always be aware. If you want to make money on your investment, you can. Possibility is there. And one thing, man, I don't know whether you will agree with me or not. Next 25 years are going to be golden period of Indian economy. Most people, most even economists and thinkers have come to the view that next 25 years are going to be golden period of Indian economy because Indian economy will grow like anything. But my dear friends, the benefits or fruits of the growth of Indian economy will be available only to those who are investors. Otherwise, Mr. Mayan, after 25 years, you will simply be clapping that my country has gone to this place, my GDP has gone to this, my country's GDP has gone to. What you got out of it, you will get only when you will invest. That is why I will request all of you, please be an investor. Start investment as early as you can. Continue the investment as long as you can. Always be aware, always be alert about the investment you have made. And if you feel that the performance of the investment product where you are invested is not good for a period of time, change it. Come out of that. Switch it to some other investment products. So you can make money through investment, and that is, I think, Mr. Mayan, that is your right. It is your right. Investment is a necessity, and the first benefit we get will be that we will be getting good money in our life so that we can lead good, comfortable life and so that we can live comfortable life to my family. Thank you very much for giving me opportunity. Now, I am open to questions. If anybody has any question, please come forward. Just raise your hand. We will unmute you. You can directly ask the questions. Come forward and ask the question. I will welcome questions from participants. And you have got any doubt, or if you want to contradict any of the points I have made, you are welcome to ask. Please come forward and ask the question.
Sir, one question in chat box: how to find a better mutual fund or scheme? Is there any method to